Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. Back with us once again, Peter Schiff. He is the CEO of Euro-Pacific Precious Metals. Peter Schiff, lots to talk about today. Thank you for joining us.
Sure. Thanks for inviting me back on.
Well, let's talk about Cyprus. I mean, they say, hey, it's all solved except for one thing, capital controls. What's going on in Cyprus?
Well, it's really a wake-up call for everybody that has a bank deposit. A lot of people put their money into these Cypriot banks, and they were really complacent about the risks that they were taking. When you are a depositor, you are, in fact, a creditor of a bank. You are lending your money to the bank. Now, in many cases, the deposits are protected by some kind of government deposit scheme, and so people figure there's no point in worrying about it. Although the deposits do have limits, and there are accounts that exceed those limits, but in many cases, everybody expects there to be some kind of government bailout, no matter what, that this depositor relationship is somehow sacrosanct, and that is part of the problem, because it leads to much riskier lending activity on the part of banks than would be the case if you didn't have this moral hazard. If governments weren't backstopping banks, then depositors would be more careful about where they put their money, and therefore banks competing for those more prudent depositors would pursue a more conservative structure of their loans so that they would have a bank that would be able to attract customers. But so that doesn't happen because of the government. And I think people need to look at this and learn a lesson.
Well, could this spread to Europe? And that's what some people are thinking, that once people start beating on the door saying, hey, I can only get 100 euros out of my account today or this week or whatever they decide, couldn't this spread to Europe? And what about U.S. banks? I mean, we have $10.8 trillion in deposits. I just checked this with the FDIC. $10.8 trillion in deposits, $33 billion in the insurance fund. And, of course, they have a $100 billion line of credit to the Treasury, but $10.8 trillion in deposits in U.S. banks, $33 billion in insurance.
Yeah, and of course, the money they do have, the $33 billion, if indeed it's that much, I thought it was a little lighter than that, but all of that is in U.S. Treasuries, so they'd have to sell those Treasuries, and in order to tap their line of credit to the Treasury is tapped out itself. So the Treasury is going to have to sell bonds in order to give money to the FDIC. So in other words, we would have to have a massive bailout in the event that we had major banking failures here in the United States. But look, there's no question that this will spread in that other banks will fail. The question is, will governments do the right thing and allow the depositors to lose money, or do the wrong thing and bail out the depositors by printing a bunch of money, which in the long run means that the deposits will lose even more value, as will any money that's not on deposit. Money stuffed under your mattress will lose value if they have to print money in order to bail out the bank deposits. And the other factor is, are people going to be more reluctant to deposit money in the bank? Are they going to be worried about a bank failure? And I think with interest rates so low in many parts of the world, for example, here in the United States, banks are paying no interest. So why take a chance? I mean, why leave any money beyond what you immediately need, to clear your rent check? Why would you leave any extra money in a bank to get 0% interest when you know that your bank is probably insolvent, may very well fail, and even if the FDIC bails you out, you're going to lose to inflation. So why take a risk? I think pull your money out, put it in some kind of investment. You can buy stocks, you can buy real estate, buy gold, buy anything other than a piece of paper, which is going to lose value.
Do you think the Cyprus thing spreads across Europe and eventually comes over here? A. B, was this the litmus test? We'll take some money from depositors. The IMF is involved in this. Their address is Washington, D.C. And the ECB is involved in this. Is Cyprus their little litmus test to see how they're going to proceed in the future, that, well, your deposits really can go for a tax?
Yeah, I don't know. I think they're going to try to distance themselves from this. First they said it's a template. Now it's not a template. I think the politics are going to put pressure on European officials to say, no, 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 this is the exception, this is not the rule. And I don't expect there to be an immediate stampede on the banks, because I don't think most people are smart enough to realize what the danger is. But I think some people will wake up, and some people will be reluctant to keep deposits. I think the offshore banking industry might be shaken up a little bit first, where, there was a lot of offshore money put into these Cypriot banks. And I think the offshore depositors may begin to be more worried about the solvency of the banks. They might look beyond the supposed guarantees of a government and try to look at the balance sheets of the banks in which they're depositing their funds, look at the country into which they're depositing it, to try to make sure that they have a sounder institution. I think for that reason, we've seen a lot of demand increase at our bank, my bank, Euro Pacific Bank. We've had a lot more interest ever since the Cyprus incident. So I know people are shopping around looking for safer banks to deposit their money.
Well, let's talk about your latest article, and it was the stimulus trap. And you've been saying things like there's no exit for the Fed. They think it's a fantasy that they're going to ever tighten, that, this stimulus trap turns into, this easy money nectar that we have to have. We're addicted to it. And you pointed out, and this was a very important point, that most borrowers, not most, but almost half, 44%, have a credit score below 700. And they're loaning them money for houses. I mean, is this part and parcel of we're making this problem worse by more and more cheap money and more debt?
Well, of course we're making the problem worse, but solving the problem would involve some short-term pain for a lot of the players, and so we don't get any solutions. We just get a bigger problem. It's all about borrowing more money and spending it. That's all we care about. How do we make the GDP bigger? And nobody looks at how much liability, how much debt we accumulate in the process, or are we producing more or simply borrowing money to buy what other people produce, which is what we're doing. And we're trying to create an economy based on the wealth effect associated with rising stock prices and rising real estate prices. That's the exact toxic formula that the Fed used to inflate the housing bubble. And the financial crisis of '08 was the result of that. And instead of learning from their mistakes and recognizing, what they did wrong, they're ignoring the lessons of history. They're just doubling down on their mistakes. They're creating a bigger problem, which will unwind in a more painful way.
I got to ask you a final question about gold, because, Euro Pacific Precious Metals. Why isn't gold taking off like a rocket? People say, wow, with the Cypriot banking crisis, and, Lawrence Kotlikoff says this could spread, the PhD economist at Boston University, he says that this could spread like wildfire. Other people are very worried. People like Jim Sinclair think this is going to be some sort of a tipping point. Why in the world isn't gold taken off to the moon?
Well, I don't know if this is going to be the tipping point. It is a straw on the camel's back, right? If they're going to accumulate, I doubt this is the one that breaks it. But why gold isn't rising, I just think it's due to the fact that the vast majority of people who are managing money, mainly they manage other people's money, they're completely clueless as to what's going on. And so they think that the economies are out of the woods, that the dollar is going to be strong, that stocks will make new highs, that we have a legitimate recovery. And so they don't think there's a reason to own gold. I think they're wrong. But right now, that is a more powerful move. People getting rid of the gold that they bought a year or two ago is currently providing more supply to satisfy the demands of people who I think are thinking clearly and who are buying gold. But I think sooner or later we'll run out of the fools who are selling, and the buying is only going to continue and grow as more and more people wake up to the reality. A popular bar of gold that we're now selling at Euro Pacific Capital is something called the Valcambi Combi bar, which is a 50-gram bar of gold, which is about 1.6 ounces. So it's about $2,500 melt value bar. But people are buying it because it's divisible into 51-gram bars. It's kind of like a chocolate bar made of gold, and you can break off little pieces, and they can obviously be used as money. They can be used in barter transactions in the event that there is a currency crisis, that there's a collapse in the value of the dollar. So people are trying to prepare for a real crisis in banking and currencies by storing up gold in a manner in which it could be spent, that it can be bartered for other commodities, goods and services that people might want if they think they might not be able to get those services or products for paper money.
So Cyprus may not be the straw that breaks the camel's back, but in your mind, a currency crisis, a bond crisis, spiking interest rates, a crisis is on its way.
Well, there's no question. There's no question about that. This is the end game is a huge crisis. We can speculate as to the form that the crisis is ultimately going to take, but we know it's coming because the Federal Reserve and the government, they have to keep interest rates artificially low. They have to keep printing money to delay the crisis. But the more they keep doing that, the worse the crisis is going to be. And the crisis is either going to come because they eventually take away the punch bowl too late, or they never take it away at all. But either way, it's a crisis, and you need to prepare for it in advance.
Peter Schiff, Euro-Pacific Precious Metals, thank you for joining us today on USAWatchdog.com.
Thanks for having me on.